Welcome to today's video, where we unveil the surprising surge of the Nikkei 225, which just recorded its most explosive single-day market cap gain in weeks. Japan's core CPI has plummeted to a remarkable four-year low of 1.4%, injecting over $210 billion into the market today. So, is the pressure on the Bank of Japan finally easing, or are we on the brink of a major policy shift? Let's dive deep into the numbers. Today's market movement was primarily driven by the release of Japan's core CPI data, clocking in at 1.4%. This figure is noteworthy as it marks the lowest inflation level in Japan in 4 years. Given the market's hypersensitivity to inflation and potential tightening of monetary policy, this soft reading offers a significant sigh of relief for equity investors and global traders alike. The ramifications of this 1.4% reading were immediate. The Nikkei 225 saw an impressive increase, adding over 22.8 trillion yen in market value in just one session. This surge is a significant catalyst with far-reaching global implications. While the market celebrates, this data creates a complex scenario for the Bank of Japan, which faces mounting pressure to normalize rates after inflation has previously been stubbornly above their target. On social media platform X, market sentiment has overwhelmingly focused on the easing of pressure. Notable global strategist Mohamed El-Erian emphasized that this print is the lowest inflation rate since 2022, suggesting that it may relieve some of the Bank of Japan's immediate pressure to increase rates. Additionally, various high-engagement accounts have pointed out the direct connection between this soft inflation data and the $210 billion boost in the Nikkei's market cap. However, the narrative isn't entirely optimistic. Reports indicate that two members of the BOJ board, who previously voted to maintain rates, are now hinting at a shift towards hikes. Currently, overnight swaps are pricing in an 80% chance of a rate increase on June 16. This looming decision is critical as it could lead to a spike in global yields and potentially trigger an unwind of the carry trade, despite the current soft inflation data providing some temporary cover. Today's addition of 22.8 trillion yen to the Nikkei marks one of the strongest single-day gains in recent memory. Investors are interpreting the low CPI as a sign that the Bank of Japan may take a more gradual approach to policy normalization. This renewed sentiment is revitalizing Japanese equities, which have been struggling under the weight of yen volatility and interest rate uncertainty. The big question now is whether this momentum can be sustained as we approach June. This rally in Japan is occurring simultaneously with record highs in U.S. markets. Despite ongoing tensions in the Middle East, both the S&P 500 and Nasdaq have achieved their highest weekly closes in history. A major driver behind this is AI-related spending, with an astonishing $325 billion allocated to AI capital expenditures. Nvidia's continued strength is pushing the Nasdaq upward, which has surged an impressive 28% in just 8 weeks, indicating that global demand for AI is currently outpacing macroeconomic risks like rising oil prices. For individual investors, the immediate focus must be on the June 16 Bank of Japan meeting. While the 1.4% CPI print sets a bullish backdrop for stocks, the 80% likelihood of a rate hike keeps volatility on the table. Risk management is crucial. Keep an eye on U.S. 30-year yields for signs of global transmission. If the BOJ does decide to hike rates, we could see a sharp unwind and carry trades that might offset the gains we witnessed in the Nikkei today. Based on the current data, here are 3 AI-driven scenarios for the upcoming weeks. In the base scenario, the BOJ opts for a more gradual normalization path, which could support continued gains in the Nikkei as inflation hovers around the 1.4% mark. The bull scenario envisions that cooling inflation and ongoing AI capital expenditures could drive the Nikkei beyond previous records as fears of rate hikes completely fade away. Conversely, the bear scenario warns that if the BOJ surprises the market with a hike on June 16, we could see a global yield spike that triggers a massive market correction. In conclusion, Japan's core CPI stands at a 4-year low of 1.4%, the Nikkei has gained over 22 trillion yen in value, and all eyes are set on the June 16 BOJ decision. What are your thoughts? Will the BOJ hike rates despite the soft inflation? Share your opinions in the comments below, and don't forget to subscribe for more in-depth market analysis.